In the fast-paced world of business, finding a clear path to profitability can be a challenge. Welcome to 0 to 100 with your host, Jared Guy Randolph, seasoned business and finance expert. Tune in for actionable insights and strategies to accelerate your business success.
Hello, Accelerators. Welcome to another episode of 0 to 100. Today, I am very excited to introduce our guest, who is the founder and CEO of Sunwise Capital, Mark Kane. He has an illustrious 20-year career in business finance, and he has scaled a online lending platform to $18 million in revenue. So this guy knows how to do lending and get you what you need as a business owner. We're going to cover some really cool topics today, such as merchant cash advances, how to do them right and work with the right people so they don't end up harming you. They end up helping you grow your business, term loans, and how to go through the underwriting process to make sure you actually get approved and you get approved quickly. For those of you who don't know me, my name is Jared Guy Randolph. I am the founder of BoxFi. We are the nation's leading payment consultant, providing business growth solutions through payments, working with businesses just like yours. And I'm super excited to share the relationships and network that I've built over my 25-year entrepreneurial career to help you grow your business and become more profitable. Ladies and gentlemen, let's accelerate together. Mark Kane, thank you for joining us for 0 to 100.
Thank you. Glad to be here.
So I'm very excited to have this conversation with you today because I think it's going to give a lot of value to our audience. In fact, I know it's going to give a lot of value to our audience. And we're going to talk about different, unique lending opportunities. Can you do me a favor and give the audience a synopsis of the two type of products that you typically work with that add value to merchants who have cash flow, selling their product, service, et cetera?
Sure. I think there are primarily two main products. And the first, I would say, is the term loan. And the second would be the merchant cash advance. Those are probably the two primary types of loans. We will do others, SBA, we'll do asset-based, but I would say the vast majority, and probably well over 90%, fall in that arena of term or merchant cash.
Can you walk us through what the difference between term and merchant cash loans are?
Sure. So the merchant cash advance, which unfortunately over the years has, I think, somewhat undeservedly, got a bad reputation. Now I say somewhat undeservedly because there are lenders out there who are, we'll just say, not so nice and will take advantage of that merchant, feeling that they hand them over a barrel. But basically, and I think the key to understand is that the merchant cash advance is not a loan. So that's the first thing that you have to really understand. And from the business owner's perspective, sometimes it's a little bit challenging because they just assume you're giving them money, you must be lending me, it's a loan. No, it's a cash advance. So basically what we're saying is we're going to give you money today and you're going to pay us from your cash flow, literally from that cash flow of whatever you do on a daily, weekly, or monthly basis. There is not an interest rate, and this is the biggest differentiator. It is not an interest rate, it's a factor rate. Now, the challenge with that is that it's just natural for all of us to want to take that factor rate and call it an interest rate. And that's where the confusion comes, because that's when you have a factor rate of, well, it could be as low as 1.15. It could be as high as I've seen outside of what we do, 1.6, 1.65. So somebody will come back and say, that's 65%. That's outrageous. And I would agree, possibly. And if we have time, I can get into my story when I first borrowed money, and it was not a merchant cash advance, and what the interest rate was and how I framed that. However, so it is a factor rate. So to keep it simple, if you borrowed $100,000, if that's the amount that you borrowed, and the factor rate will just say 1.25. So you're going to repay $25,000 on the $100,000. And that's going to be withdrawn as a fixed rate, depending on your cash flow. So that's the advantage of the merchant cash advance. So if I'm doing well and business is really streaming, I'm going to have more taken out because I have more money coming in. The reverse, though, is what really will save the merchant. Things have slowed down. Maybe it was bad weather. I mean, there's any number of things that could be going on that will cause the slowdown. And instead of that fixed amount, which the term loan is, the term loan, the differentiator, it's that same dollar amount, whether it's weekly or monthly. The merchant cash advance will reflect the health or the cash flow of the business at the time.
Gotcha.
Term loan is fairly simple. It's going to be a set amount of time, 1 year, 2 years, 8 years, whatever the case may be. And it'll be a fixed dollar amount, regardless of how well the business is doing. So if you're running into some challenges and you have trouble paying, that's, could be a challenge. And so that's probably the big differentiator for the business owner. Am I positive? Yeah, my cash flow is consistent. Now we can see that on our side, but the question they have to ask themselves is, do I see fluctuating cash flow where it would be advantageous for me to have the payback slow down when things have slowed down versus I'm stuck. I've got to make that $500 a week or $2,000 a week or a month payment, good or bad. Does that make sense?
That makes sense. So I'm a business owner and I'm coming into you and I say, I need a loan. And these are outside typically, and correct me if I'm wrong, a conventional bank loan. And let's say I need a loan, I'm coming to you. How do I determine which one of those products, whether it's a term loan or it's a merchant cash advance, is right for my business?
Right. And it's funny you say it's outside of the bank purview. I happen to have had a call just a few hours ago from a banker, and they're looking to refer a business to us. So we got into the nuance of the differentiation between the bank versus what we do.
Right.
A term loan is a term loan, period. So when we offer a term loan, just to understand, it is the same thing that you would get from a bank. Our rate could be slightly better, it could be slightly more. Our term, the amount of time to repay, may be better than the bank or not as good. And I bring that up only because the banker made it clear that they don't like every business. And that's something that the business owner has to understand and somewhat appreciate. We always encourage, especially on a client that they've been in business for a while, they have great credit, they have a lot of revenue. And the first question we'll always ask is, why aren't you going to the bank? Because they have to understand that ultimately, at least in theory, the bank should be the best for them. And they'll give us any number of reasons. Again, we can get into some of those reasons. So what we do as a firm is we want to offer that business owner. We go in saying, we want to underwrite this in such a way that we can offer them the most amount of money for the longest term at the best rate. So that's the mindset going in. Now, when we start looking at some of the touch points, maybe it's personal credit, maybe it's business credit, maybe it's time in business, maybe it's the industry, that starts altering or changing how we look at that business, because it's all based upon risk. If in theory there's no risk, that person is going to get the largest loan based on revenue, as well as the best terms and rate. But that's not always the case. So a lot of times the business owner, and this happens more times than not, they'll come to us and they'll say, we want a term loan, or probably more often, I don't want one of those MCA things. I don't want that business cash advance merchant, whatever you want to call it. It's all the same, doesn't matter. And we respect that. But after we do our underwriting, a lot of times, especially the ones that say, I don't want that, that is the only thing that they qualify for. That is the only way they're going to get money. And part of the process is gently letting them know that this is really their only choice. You don't have to like it. You're free to go and explore other companies or whatever you think you may qualify for. But we're pretty good at what we do. We've been doing it for a while. And we pretty much know that no one's really going to talk to you, especially there are certain industries from time to time that we like and many other companies don't like.
So it sounds like to me, in terms of making the decision between whether a term loan or merchant cash advance, is basically what your profile is.
To start. So here's what happens. So now we talk about, here's what we think makes sense. And we get a little bit of commentary, pushback, whatever you want to call it, from the prospective client, and we respect it. Look, ultimately, when I talk to someone, I say, you're making a business decision. You have to be happy. My job, if you will, is to lend money.
Right.
Well, that's what I want to do. I want to lend money. I want to lend money to someone who says, this is good, and it makes a lot of sense for my business. So ultimately, the type of loan you take matters less. What matters more is the comfort that you have, because we're looking for that long-term relationship. I don't want this to be a one and done. Sometimes it does happen. But I'm looking for somebody who 10 years later is talking to us and discussing their need for additional capital. And we do have clients that have borrowed 20, 25 times from us, and happens to be a well-heeled, bankable client who only does merchant cash advances with us because of the speed. He knows what he's going to do with the money. He's in construction. He has to dig a hole. He doesn't have time. Not that it takes necessarily a lot of time. So one of the other things that will change the scenario is client or prospective client will say, I have good credit. And we agree. Yes, you have good credit. And I have good revenue. Yes, you do have good revenue. Well, why am I not getting something better? Okay, if you want to take a little bit more time, let's talk SBA. And what does that entail? And once they get what that entails, they're having nightmares, because this is exactly what the bank already spoke to them about. Because there's not a lot of difference between non-SBA through the bank and SBA.
Right.
The hurdles, if you will, are the same. So I think it's important that a business owner understands a few things. So one is that Harvard did a major study on the process. And this is a few years ago. I don't think anything has changed. If anything, it's become a little bit more rigorous. So they did this massive study on what steps do business owners have to take when they're looking for funding or financing through a traditional conventional bank. There's up to 28 different documents that business owner is going to have to fill out or provide. Wow. And this is beyond the standard profit and loss, balance statements, and it will now include every owner in the business. They want personal tax returns from every owner in the business. They want business tax returns. It's got to be a minimum of 2 years. They want to see all the insurance documents. The list is 28. Okay, but that's only part of the problem. It takes, according to Harvard, about 28 hours to do all that work, to pull all this paperwork together. And a lot of times, business owners just don't have an extra 28 hours. And even if they're working with accountants and bookkeepers, by the time that keeps going back and forth, I know just simple things that I request from our accountants can take days or sometimes even weeks, depends on the time of the year. And to top it off, you have to visit approximately 3 banks to get the deal done. Yeah. That's the rub right there. So here's one of the challenges, and one of the, I think, mistakes that a business owner makes is the frustration in any bank. And the bank is not lending them money for whatever reason. It's irrelevant. The frustration is, well, I'm going to go to the bank next door or down the street. And when you talk to that banker and say, I'm doing business at Bank of whatever, and I'm thinking of moving to you, but I need money. Can you help me? Banker says, absolutely, of course. All you have to do is move everything over here. And of course we can help you. That's usually not the case. Banks get paid, and this is a conversation that I had today. Banks get paid with money under management. Yep. They're not getting paid per se to that because they're lending money. That's a totally different division. So now we have that abbreviated discussion. We don't necessarily get into this detail because you asked which way you're going to go. Right. And that's why the bankable clients that we have say, no, I'd rather go with this other product, which we're going to call the MCA.
So let's talk about, if you're in that position as a business owner, how do you calculate that return of getting those very quick funds versus the cost of those?
So every business is a little different, and hopefully the business owner has an understanding of their ROI, their return on investment. Right. So one of the questions that I'll get into, and I'll say, depending on the size, but we'll just keep it simple. This is the conversation that I have with the business owner. If I give you $10,000, I give you $100,000 today, what will it be worth? What's your margins? What's your profit? And most businesses come somewhere in between the 20 to 30% margin. Some are more. I mean, I have clients that are at 50, 60% margins. I have clients that are in the single digits, but that's only part of the equation in my mind. Now, I'm not an accountant, and I don't profess to be one. Mm-hmm. And if it's a little bit more than the business owner can handle, we say, listen, talk to your accountant, but most of them don't need that conversation. They know, they have a sense of their number. Okay. Mm-hmm. So you're going to borrow 100, and let's just say the factor rate is 0.25. So you're going to pay back 125 on the 100. Now, the first 100, that's the money that we're giving you. You're paying that back no matter what. I don't care what you want to call it. You borrow 100, you're paying back 100. The $25,000, that becomes now the question. Mm-hmm. So the way we frame it, and I think we do a fair job, is that 25, and I'm most successful, and this is why we have those clients that just keep coming back 2-3 times a year after year. Mm-hmm. The 25,000 is an expense. So that's your cost of funds. Right. The question is, your margins are 25%. So in theory, I give you 100, you make it cost you 25, you just broke even. That made no sense at all. Right. Okay, let me ask you this. How quickly do you turn over your money? In other words, if I give you the money today, when will you have turned the money? Mm-hmm. What we find is a lot of businesses in a quarter, I buy the inventory. Within 3 months, I'll have sold all the inventory. Okay. So now this is a 1-year term. So now technically, yes, you are making payments, but let's put that aside. We've already established that you can afford it, because if we're offering you the 100, we're saying you have breathing room. This is not to your last dollar in your account. We want to make sure that we see your fluctuations, you can afford it. Right. Okay, so the 100. So you take the 100, you made 125. Technically, you can now take that 125 3 months later and do the same thing again. And you can do that 4 times a year. So now you've made 100,000, right? On 100,000, you owe me 25, you made 75. Would you invest 25 to make 75?
Okay, so this is interesting. So what you're saying, if you're looking at a merchant cash advance, if you're borrowing 100,000 and you have to pay back 125,000 and you have a 12-month term, you can turn that $100,000 multiple times and you pay back 25,000 a year. So for a business who has multiple turns of capital, that 25 that they're paying for the 100 could get them an additional 100. So they're still paying 25,000 to make 75,000, and they have no other way of doing it. That sounds like a good deal to me.
This is once, and again, I'm sure you have someone in the audience who's going to take exception to how it's framed.
Right.
But I borrowed $5 million way back when, the first time and it was because I couldn't go to the bank, I had whatever, a whole host of reasons. And it was very expensive money. And it worked because my ROI was so high that it was from a hedge fund. So it was very, very expensive. But my ROI, and I understood that going in, and the hedge fund knew that too. And so they were comfortable saying, oh, this is what we're charging you. And I was comfortable saying, well, I'm comfortable paying it, because I knew how quickly we were going to turn the money. Right. So that's the key. For the business owner that's uncertain, hasn't really worked through the numbers, was too generous in their projections, felt like, I know that if I refurbish my restaurant, add another 25% seating, I'm going to generate an additional X amount of revenue. And it just so happens that they run into freaky weather, whatever the case may be. Something in the economy gyrates, and they underestimate it, or they overestimate it, depending on how they're looking at it. And that's where the challenges come in. And or you have business owners that they really don't have a good grasp. I mean, we're fully transparent. We go through everything. It's down to the pennies. They don't have the grasp that they really need to say, this makes sense.
Okay. So talk to me now that we're having this conversation, because I think it's a really important conversation. My experience and understanding for merchant cash advances they've been quite predatory. And I think it's because there are bad players in the market who take advantage of business owners and don't go in with a plan and don't explain to them what you're explaining right now, which is a huge value add. Talk to me about what bad terms look like and what good terms look like.
So that's hard to define, because I could say if your rate is over X, that factor rate is greater than, that's bad. But that's really unfair, because I don't know the risk per se. So I guess first, does that make sense? So
That makes
just generically, that's a little bit challenging. I certainly would love to answer it, but I don't know if your credit is 490, but you have a really good business, or your credit's 720, and maybe the business isn't as good, but you've been in business longer. I mean, there's so many factors that come into play, so many variables. So here's where I take exception. If you want to say what's a little bit unscrupulous, a little bit backhanded, and I'm certain, look, I'm not going to say anything that a lot of people don't know, like, oh my God, I can't. But on the other hand, it does bother me as a human in dealing with other business owners. I mean, I'm empathetic. I know what it feels like, and I know what it feels like to have someone take advantage of you.
Right.
So here's what happens, and this is what's bad. And again, it's a flag. It's not black and white, but it's like when you go to the beach. There are different colored flags. I'm okay sometimes with the yellow flag.
Right.
I don't like the purple flag. The purple flag means there's creatures in the water that could bite you. Okay.
That's right.
All right. So here's what happens. There's different scenarios. Let's say I make $1 million a year. If for whatever reason, the lender that you went with says, we're only going to give you $20,000. Realistically, they probably could have afforded $100,000. But for whatever reason, maybe the business owner takes 20 because in his mind, that's all I need right now. And then all of a sudden the project blows up in a good way and they realize they need more money. That original lender, odds are they will not go back to the well. So now the business owner is forced to go to another lender, and he will take a second position. And there is a certain limit. And let's just say it's about $100,000. That should be it. Where the business and the business owner needs to beware is, and we see this too often, and it does pain us, because I've seen great businesses get ruined. You'll have individuals out there who will make promises that they can't keep. And here's what I mean. The business owner says, I want a line of credit. That's really what everybody wants. Why? Well, that's sort of like the tissue or the Xerox, right? That is the broad-based generic term, line of credit. So the individual that they're talking to will say, I can get you a line of credit. But before we do that, I need you to do this. This is going to set up so we get you that line of credit that you're looking for. And the setup is, I'm going to get you this merchant cash advance. On the pretense that right behind it is this line of credit.
Big line of credit. Yeah. Heard that.
Right. Okay. So line of credit, let's just say it's, APR 15, 20%. Okay. Which is different than a factor rate of 1.45, 1.55. But again, the pretense is if you take out this merchant cash advance, you're going to get this line of credit. And what ultimately happens is that individual who sold the deal disappears. Why? Because they're driven by a commission.
Right.
We all get paid in one manner, shape, or form in the business. Always joke, and you can probably tell I'm no longer 25 years old. And when we talk to them, we let them know that you're not going to be bombarded by individuals who are just trying to make the biggest commission possible, that they don't have a commitment to the business. They're in for a fast buck.
Right.
And that's where the business owner gets in trouble, because sometimes they don't know. But my gut tells me you can tell the difference in a phone conversation between someone who is looking out for you and taking the time and keeping it calm and not getting excited and no pressure at all that you have to do it now, you have to do it now, you have to do it now. If they're calling you 5, 6, 8 times a day, which happens, if you're getting flooded with their emails and texts trying to get you to take action. And that's not to say that a legitimate lender won't put a time frame. It's not unusual, let's say at the end of the month, that you're trying to get X amount of money out on the street. I mean, that's what lenders do. And so what the business owner should be experiencing is not the pressure to take the deal, but here's a better deal for you. In other words, it's the end of the month. I'm trying to hit some internal numbers. Here's what we can do. I'll discount it. I'll try to shave something off to make it better for you. Not worse for you, better for you. If you can do it by Friday, because Friday's the end of the month. That's okay. There's nothing wrong with that. But in my opinion, the individual who's calling the business owner 5, 7, 10 times a day, basically yelling at them to take the funds. And I think a lot of times they don't have the wherewithal to say no and hang up.
So I want to make sure that I'm hearing this clearly, because I think this is really important for the audience to tune into, is when you're seeking a merchant cash advance, you want to make sure that you are working with a credible lender who is on your side. They're finding out about your business. They're giving you the appropriate time. If they're pressuring you to buy now, sign now, time is about to expire, most likely they don't have your best interest in mind, and they're not somebody who's going to be looking out for you beyond just that transaction.
So it's that, coupled with they're telling you they're bundling two loans together.
So another thing you need to watch out for is when a merchant cash provider is telling you that they're going to bundle the MCC as well as a line of credit. That's typically something to be wary of.
For sure. Because, and I'm not saying, I've been doing this for 14 years. We have never bundled anything. What we may do is, here's what we'd like to see, Jared. I would like to see you do this. Let's take another look in 30 or 60 days to make sure you feel good. And you really now are telling me, Mark, yes, I need more funds. It was just not enough. This thing is better than I thought from my perspective as the business owner, and I could use an additional, whatever the case may be. But most legitimate lenders, they don't want to see owners borrowing like today and then another loan tomorrow. I mean, that is such a red flag, but you'll have the players out there that don't care. Why? It's no different than you applying for credit cards.
Yeah.
You know that I apply for a credit card today. Okay. And let's just say I'm approved. If I send out another application to another credit card company tomorrow or next week, I can almost guarantee you, not only will they say no, they're going to flag you because the velocity is too great. You should not be applying. In other words, they're going to say, are you going out of business? Are you personally credit cards? Are you struggling? Are you not going to go into bankruptcy and all you're trying to do is a money grab and get as many credit cards as possible? Very likely, yeah. And it's no different on our side. We do see it. I mean, there is fraud and there are those that work in cahoots with somebody else to get as much money, do the grab and go. And that's unfortunately to the demise of some decent businesses.
Well, it makes sense if you think about it. This isn't a loan on a piece of property. So it's not like you're going to have a first and a second mortgage or a senior and a mezz piece because there's no tangible asset. You're lending against, whether it's this term loan or it's the MCC, you're lending against the cash flow of the business. So if somebody's telling you that they can stack loans, what are they stacking loans on? So it doesn't actually make sense that somebody can come out and give you that merchant cash advance and then provide a line of credit 15 days later. I can understand the reassessment that you're talking about. That makes sense because we get through one, see if that works, and then we could potentially pull you up.
We know, again, we have that $1 million business. And for whatever reason, ultimately we're saying, we'll sign you with 50,000. Okay. But we really know that they're good. It could have been 100. So there is room. That's a little different than me thinking short-term saying, gee, I can make a lot of money if I do 2 or 3 loans simultaneously. And there are a lot of the unscrupulous guys. So if, to the listener, if they're getting the sense that the transactions are not a single transaction, but multiple transactions, and they all have to be done on the same day. Okay. Gotcha. You've got somebody who's doing a hit and run.
That is a public service announcement for the audience to be wary if that's the type of character that you're talking about. And these are the type of things that the audience wants to hear because they come here to get that vital information that's going to help protect their business, grow their business, create more profitability. Let's switch gears a little bit and talk a bit about what you do when looking at a potential term loan for a business and how you would underwrite something like a term loan.
So the underwriting process really is the same. So it's an algorithm. For the most part, it's all computerized, but that's nothing new. Back in 2005, I had a consumer loan portfolio that I was putting money out. And just to put in perspective, we would look at consumer loans and business loans. Consumer loans are easier because I just have to look at the person and not the business as well. But just to put it in perspective, we were getting 10,000 applications a day, and our decisioning as to go or no go was inside of 3 seconds. So when you're asking the question, the process, so there is this process where some level of decision making can be done quickly. So typically a lender will have what is more commonly known as a waterfall. And every lender is different because every lender has something that's more or less important versus another lender. And so what happens is, as it goes down the waterfall, it's either, let's just say yes or no at the beginning. Yeah. There's no maybe, there's no nuance. There's no story to be heard. So it's yes or no. You've been in business 3 months. You've got a 500 credit score. You have no business credit. Pretty much no.
that's pretty much no. That is no. That is a big.
Yeah. Now, there are some lenders that will work in the MCA space with a company that's 3 months old. The credit's really irrelevant because, as you mentioned, these are unsecured. There's no PG attached per se. There's no asset attached per se. So they got lousy credit. They've been in business 3 months, and they only have to do a minimal amount of cash revenue. Literally, as long as they're doing $3,000 a month. Well, there are a lot of guys and gals out there that have side hustles that do better than that. You know what I mean? As opposed to what we would consider to be, and not that the side hustles are not legitimate, but what we would think of in terms of traditional business. I mean, everybody starts somewhere. So with that, a lot of the underwriting process is the same until it gets to more of the decisioning. Now we're seeing strong personal credit, 700 plus, strong business credit, paying their bills on time, 5 years in business. So the 3 to 5 years is one of the big break points. So 2 years or less certainly is a higher risk. 1 year, 6 months, I mean, you'd have to be crushing it for us to really do anything if you've been in business for 6 months and looking for funding. It happens. So now we want to look at tax returns. So this is where it goes from the automation to the manual, because now we're looking at perhaps a balance sheet. We're looking at a P&L, depending on the type of term loan. Do you need to be profitable? Yes or no? How much was the profit? Doesn't have to be gargantuan one, but we do want to see a certain number. And so that's where a more nuanced approach, where an underwriter is actually massaging numbers. Now, with that, the merchant cash advance pretty much is an automated process. It's pretty straightforward. And that's how we can fund somebody literally within hours. You come in the morning, we've approved you, we've gone through the whole process, you've been approved, you're getting funded today. And then at, let's say 5 o'clock, the money is wired into your account. The whole approval process period, 4 hours. Term loan, not so much. Term loan is going to take more time because we're going to look at paper, we're going to do it. Now, on top of all of that, there is sometimes a story that's compelling that is not showing up in the application or in the paperwork. There's something more that needs to be discussed. And you got to get a better understanding of why did this happen? What were the circumstances? Could be good, could be bad. It really doesn't matter. Is there something compelling to it? And I often will talk to, depending on the relationship, I'll ask them, have you ever watched Shark Tank? And it's the people that have somewhat of a compelling story that grabs the shark's attention. You know, you're asking for money. Show me on your business. If I'm going to committee and the committee wants to know why we are giving this person $250,000, they just see a piece of paper or a computer printout of the score. What's behind it? What is going on? Oh, didn't realize you just got a patent on something that you've been working on for 10 years. And this puts you in a position to now sell through to Walmart or Target or whatever the case may be at a much grander scale. Now we get it. Yeah, okay, that makes sense. Or, gee, didn't know there was a local law that changed that enabled you to build something that you weren't previously able to do at the speed at which you're doing it. Makes sense. Good story. Okay. Could be on the flip side, I'm owed a lot of money. That's why I look so terrible. I'm owed a lot. Walmart just isn't paying me very quickly. That for sure happens. You know, Walmart doesn't care. They'll hold your funds for 90 days if you're lucky. I've heard some horror stories when you're dealing with these big bucks. So, I mean, there are a lot of circumstances. That's something I want to know. Yep. Okay. You know, yes, I see. You've sent me your contract with Walmart. Yes, I see that they owe you $4 million. I'm pretty confident Walmart's not going out of business. I'm glad you shared that with me. So right. That's now the difference in terms of digging a little deeper. Again, we're still able to do it. Now, it's not going to be in 4 hours. It's not going to be in 24 hours. It could take 2 or 3 business days. So it's maybe 2 to 4 business days and then funding after. So it could be 5 business days, which ultimately is a week. But again, these are typically more substantial funds as well. And that business owner is a little bit more, I don't want to say sophisticated, but understanding of the process. We're still beating the pants off the speed of the banks.
Yeah, you are.
Yeah, but it's a process. And again, from our vantage point, speaking in terms of how we think about that client, philosophically, we started off early saying, we want to be able to set up the initial experience. So first, we're building a long-term relationship. Then from there, what we want to be able to do is give you, when you return, more money at better rates and better terms. I got to know you. We have a track record together. I see how you drive. I see how you do whatever it is that you do. More importantly, you've made every payment without any hassle. Your business has grown, and that's the key. It's very easy, and we've got enough clients where maybe they were doing $500,000 a year in revenue, and they started with a modest loan, maybe $40,000, $50,000. And then over the years, they have taken that capital and they've grown it literally to $7, $8, $9 million. Yeah, they know that they can pretty much be hassle-free when they come. That's the whole thing. It's like they're not stressed because just send me the last 3 months of business bank statements and I'll get you the money tomorrow.
So you've given us some really clear ideas on how to qualify yourself as a business owner, whether it's for the MCC or it's for a term loan. What I would love to know from you as our last question before we go to our rapid fire section, what type of industries do you work with typically? I'm assuming you can work with almost anything under the sun, but what do you typically work with?
Pretty much anything under the sun. There's a tremendous number, and it's easier sometimes to say, well, we don't do this or don't do that. Okay. Haven't done the medical marijuana. I know there are lenders that are out there. We don't do any of the adult stuff that's out there. I don't know of anybody that does, but again, I'll just leave it alone at that. So no one gets upset. We love construction. Now, that was something that we happened to honestly fall into at the very beginning. And we got clients, a lot of construction clients, and we did really well. And I'm not going to say word got out because it's not like, well, I'm honest, we're not a household name, right? But we do a tremendous number of loans in that space. We love manufacturing, wholesale distribution. Again, these are the more seasoned type of industries. Healthcare is very good. And I'll say retail, and that could mean anything from the restaurant to the local tavern to a store. And again, what we look at are those that are a little bit more established. Because retail, you just have to drive up and down the street and you see a lot of empty space out there. So you know there's a lot of risk in retail, but there are a lot of good businesses. That's how they thrive. In fact, so I have a cousin they manufacture women's coats. And years ago, we had a conversation. I told them what we were doing. And he said, if it wasn't for factoring, we would never survive. And there's not one of my competitors that won't tell you the exact same thing. So certain industries just know they're not going to the bank. They don't understand the business.
Right. That makes sense. So, Mark, we're going to jump into the rapid fire section before we sign up.
Is this where I get to choose between door number 1, 2, or 3, or is the prize?
The red pill or the blue pill? Here's your first
prize
question.
is just automatic.
Coffee or tea?
Oh, coffee.
If there were a zombie apocalypse and you had to leave your home and protect your family, what would be your weapon of choice?
I guess the shotgun.
What would be one of the number 1 business books that you would recommend that our audience reads?
So this is in the Wayback Machine. The title of the book is All You Can Do is All You Can Do. It was an interesting story of the person who wrote it. The point is all you can do is all you can do, but all you can do is enough. That's the rest of the title. And the point is that if you have the passion and the drive, you're doing enough, keep at it. And it was a great lesson.
Awesome. Dead or alive, if you had a chance to have dinner with anyone in the world,
Donald Trump.
If you were a small business owner and you're doing $10 million in sales a year, I walk through your door and I hand you a $300,000 check. How would you suggest that business owner invest that $300,000 to double their profits in the next 12 months?
I would just focus in on that. Where's my highest margin? And say, can I double, triple, quadruple that product or service in the marketplace? Which the answer is probably yes.
Awesome. Last question. What was the biggest obstacle that you had to overcome in your career to get to where you are today?
Obstacle, I think, is what's between your ears. It's the self-imposed limits that sometimes you put on yourself, that those limits they're false positives. The biggest one, the story that I tell, is the baby elephant that's chained to the post. Mm-hmm. And that chain remains the same size as the elephant grows. The elephant thinks because as a baby, it can't go beyond the chain, but as a 2-ton beast, it could sneeze and break it. But mentally, it believes it's still chained to that post, self-imposed limit.
I love it. I love that you overcame that. And Mark, I love that you are our guest today. So much valuable information that you shared with us. Mark Kane, please tell everyone where they can reach you if they have questions, comments, or complaints.
So Sunwise Capital, SUNWISE Capital, all one word.com. You can reach me direct, 561-560-7736. Or you can send an email to Mark at sunwisecapital.com. And I welcome anybody and everybody. I'll do the best I can.
Mark, thank you for joining us on 0 to 100.
Thanks for tuning in to 0 to 100 podcast. We hope you feel inspired and ready to accelerate your business. Remember, your journey to success starts with a single step. Keep learning, keep growing, and keep striving for greatness. For more resources and show notes, visit jaredguyrandolph.com. We'll see you next time.